Jack Bouroudjian, before I turn it over to my colleague Dennis Neal, how much of what we're seeing in the stock market today is a result of AIG, and how much of it is we have a big winter storm, a lot of people didn't make it into work, it's a thinly traded day, or at least it was initially. Weigh in on which one it is.
Well, here, let's go through what's been happening over the course of the last few months. It's been a very simple trade for traders, and traders are not very complicated people. They've been selling stocks right in the beginning of the month. They've been buying bonds at the same time and then unwinding that spread. I call it the economy deterioration spread, and it's worked every month so far, and they're putting it right back on. But let's face it, this selling, though, is coming from around the world. This is selling, and I was talking to portfolio managers from the Middle East and from the UK. It's coming from Europe, it's coming from the Middle East, and now that Europe is closing, we might get a little bit of a bounce. I'm not going to count on a big bounce, but, you know, again, this is AIG, it's HSBC. Yeah, I wish it was the weather. That is not the weather. This is real pressure on the market.
Jack, let me try something out on you here. I think one problem with the reason markets keep falling is it's a finger in the dike approach to fixing each crisis, and we haven't done a true fix underneath, which is the toxic assets and a real plan for that. I talked to a bank president in Florida over the weekend. He argues, you know what, the federal government should just come out and guarantee all of this MBS stuff and say, we'll pay it off if it goes bad. Then you hope to avoid a 100% bill, maybe with a 50% bill, then finally stuff can start trading. Jack, what do you think?
Dennis, you know what? You got a finger in the dike as you're talking, but there's a hole the size of my fist that is just streaming water out. You know, I think one of the problems is that we are getting so many conflicting messages out of Washington. And until, again, what Steve Leisman was saying was so important, until we get some clarity. And I know every time the government talks, the market goes down, but guess what? That's the necessary pain right now.
What about a blanket government guarantee, Jack? What about having the federal government guarantee these assets?
We might as well start. We're already there. We've already got so much money involved.
Rick? Let's guarantee it and get it out of the way.
That is just a horrible, horrible, horrible idea. Come on, give the taxpayers a break. I think that there are many investors in the world that will find value in these toxic mortgages if only the government and the rules and the plans would come up with a stencil for how you want to handle these zombies and let investors decide what the discounted future cash flows of these broken but not entirely valueless mortgages are worth.
Hey, Mary, I just want to point out that last week there was something that happened with the FDIC which might give us an idea of what is going to happen with the bad assets on the books. The FDIC worked in partnership with some private equity firms to take the bad assets off a couple of banks in Nevada, and they basically, I think it was, they sold 20% of that, and then they kept 80% of them, and will be keeping the cash flows from them. So we might be seeing, that might be a template for something we will see farther down the road for the larger banks. It's just something to watch.
Those are very small banks, though, compared to...
It was a small bank, but it might be a start. It might be a start. It might be a start.
Well, light a candle.
We have yet to see, Jack, we've yet to see this public-private partnership coming from the Treasury, which is going to be very important, which is if they can use government financing to ultimately help the private sector buy some of these assets, which would really get at proving who's right here, me or Santelli. Is it just a lack of financing, or if these assets are just not wanted at all by the market at any price? And I would make one other point, Rick and Jack, which is tomorrow we get the TALF should be launching, was the latest information we had last week, and we'll see again if this money being available, $200 billion from the Fed, can help unclog some of the consumer securitization.
Well, whatever they do, Steve, let's just hope, and Rick, let's hope they do it quickly, because, you know, the bleeding that we're experiencing here is not making the banking industry any healthier, and we all know that without the banks healthy, nothing else will work. And, you know, they're even talking about delisting Citi now. It's under $1.50, under $1.40. You know, I mean, these are things that they've got to act quickly. They've got to act tomorrow. They've got to act later today. But we don't have to
that's what they're saying. Here on the floor
Guys, we're done.